I know a lot of people are looking in the industry right now. It's fragmented in the smaller space, between $1 to $8 million acquisitions. So I think there's tons of opportunity. There's tons of opportunity to bring in automations, keyless entry, taking out maybe the front desk person may not be there depending on how many keys, and then just efficiently running it, utilizing online platforms like Airbnb and VRBO, Verbo, whatever you want to call it, and many of those platforms. Hello, and welcome back to another episode. Today we're going to talk about financing boutique motels. I got a lot of these calls for people that are looking at buying boutique motels, hotels, whatever you want to call them. They go in, they're looking for mom and pop, typically, and mom and pop owned. Then they're going to rebrand, do some property improvements, and optimize these businesses by putting them on all the Airbnb type platforms. And so a lot of people are transitioning from owning single family STR, short-term rentals, and now they want to step up and get into boutique hotels. And so a lot of people are wondering how to finance these. And I'm going to talk about SBA financing in particular for this segment and things to look for. So there are two SBA loans, really primarily, the 7A and the 504. Both can be used for real estate. 7A is more flexible. 7A is one loan versus an SBA 504 is two loans. And a lot of people that are getting into the boutique hotel business, they're doing value add. So I would usually recommend the 7A as it's more flexible and it's only one underwriting process versus the 504, which is two underwriting processes, the bank and the CDC, which the CDC is the nonprofit essentially that works with the SBA. So depending on the situation, the total project cost, there's a lot of factors, but the 7A is more flexible, shorter prepayment penalty. You can build in working capital. There's advantages for both, but I'm going to talk 7A today mostly. And on the 7A, what can you do and what can't you do? And really, banks vary. A lot of banks don't like doing non-flag hotels, but we have a lot of banks and credit unions we work with that like hospitality. They usually want to see that you have industry experience. So that's why I was hinting at the STR, the short-term rentals that are doing single-family properties right now. That is enough experience in my mind where we've had success with banks and credit unions, and they're like, okay, they've got experience in the industry. And just because you don't have experience in the industry doesn't mean you're not going to get the loan. It just makes it easier telling the story. But we always get a resume together, we get your financial statement, and we need to learn about the deal. But yes, it's very doable. And even if the DSCR, so guidelines say you need a 1.15 DSCR at least. That's pretty low. Obviously 1.4 and higher is always better for hospitality. But anyway, that's the guideline for the SBA. Now, what happens if it's a complete value add and debt service is way under 1% or, maybe it's 0.8? Is it feasible to still be able to get SBA financing? And the answer is yes, possibly. We do projections in a business plan and we can get value add deals done. Let's say it's half occupied, it's been the same owner for the last 50 years. We got to tell the story. So that's why I always say every deal is different based on your experience, based on your balance sheet, your net worth, your experiences, right? And versus that's what helps us navigate and figure out what banks would be most probable to do this deal. And that's what I do. I help you navigate and find the right bank. And we have aggressive banks. We have A paper banks that they only want the cream of the crop. They don't do non-flagged hotels. They don't probably do much hospitality to begin with. So we wouldn't take the deal there, right? We're going to go to another bank. So most of these 7A loans are prime plus margin. Prime plus margin equals fully indexed rate. Margins can go as high as 2.75. On a riskier deal, you're going to be 2.5 to 2.75. For an A plus deal, you can get prime plus 1, prime plus 0.75. Sometimes there's specials with banks if there's commercial real estate involved, like a boutique motel, hotel. So there's lots of options. But first, we got to start with the picture, get the information on the deal, 3 years of the business tax returns, description of the property. It's a 15 key. It's been owned by the same family. We need to know the kind of the background, and this helps me help you navigate and find the right bank for the deal. Why you'd want to use the 504? The 504 would most likely be used for a larger acquisition because the SBA 7A is capped at $5 million loan amount. Now, sometimes you can do a pari passu, which is $5 million plus conventional piece, and you can do $7-8 million in proceeds. But if it's a $10-12 million acquisition, you're going to most likely look at a 504, which is a first and second on $1 million deal. Just breaking it down for simplicity, $500,000 would be senior loan, $400,000 would be junior loan, 10% equity injection. So just keep that in mind. Now, if it's construed as a special purpose property, you get a 5% haircut. This property may be construed as special purpose, like gas stations are definitely construed as special purpose, and you get a 5% haircut with the 504. You don't with the SBA 7A.
Hi, this is Beau Eckstein, host of the Investor Financing Podcast. Are you a real estate investor with properties and you're trying to figure out how to refinance or grow your existing real estate business? Need some clarity and a game plan for moving forward? I'm offering a free strategy call where we dive deep on your real estate investing goals. I'll help you come up with a strategic finance plan that will help you get to where you want to go. Whether you've got a portfolio of 30 properties or you're starting out with your first property, I have a framework that has helped many investors grow. If you're interested, book a call below in the Calendly link.
So that's really kind of the components. So, my recommendations are get the financials, tell a story, give me the idea of what PIP, what property improvement we're doing. We're doing X amount in FF&E. We're going to do X amount in renovations. Here's the projections. Here's our general marketing plan, and any other insights you have, demographics of the area, the understanding of it, and that goes into the business plan. But that's what we need to know. And then from you, 3 years of financials with a resume and a personal financial statement. Once we have that information, we can go out and get term sheets from the banks. So we just need a rough budget in the beginning. We don't need everything finalized yet as we move down the road. But we can quickly get you term sheets, but you have to get 3 years of financials and year to date from the seller, not P&Ls. So I hope that helps on how to finance boutique motels, hotels. I know a lot of people are looking in the industry right now. It's fragmented in the smaller space, between $1 to $8 million acquisitions. So I think there's tons of opportunity. There's tons of opportunity to bring in automations, keyless entry, taking out maybe the front desk person may not be there depending on how many keys, and then just efficiently running it, utilizing online platforms like Airbnb and VRBO, Vrbo, whatever you want to call it, and many of those platforms. So anyways, if you're looking to buy a boutique motel and you want to talk about financing, I always say feel free to book a discovery call. But if you take anything out of this, get 3 years of business tax returns year to date, and a few things. I have a checklist if you want it, so I can get you. This is what you need. Here's Form 413. Here's a resume template. Here's the other documents you'll need. That's enough information for us to go take it out to the market. I work as a consultant, broker, whatever you want to call it. I don't charge you a fee. I get paid a fee by the bank, credit union, or non-bank SBA lender. And all I do all day is network with bankers, figure out who's doing what, and help navigate the waters and help give you the advice on how to structure the deal. Sometimes we'll do some seller financing in conjunction with the SBA loan. So lots of options. Hope you enjoy this episode. Be sure to like and subscribe. And also, if you're looking for business ownership, I have a summit coming up. You can go to businessownershipsummit.com. You can RSVP. It's a free event. It's on Zoom webinar. We have over 15 speakers. Hope to see you there. And as always, see you soon. Hey guys, Beau Eckstein here. If you enjoyed what you saw, please subscribe to this channel. We talk all things financing. I've been in the lending industry for over 20 years, and I'm happy to answer your questions and provide great content.